Hi, this is Michael Joyce from Agili, your personal CFO, and I'm pleased to present to you our current video blog from our team of experts here at Agili.
The first piece of advice that I would give is the importance of having a financial plan. If you don't have one, it would be great to get one in place, and for those who do, we believe it's important to review that plan each year. A lot of the advice that my colleagues will provide are going to provide specific nuggets that I think is important to take in context of your overall financial plan.
Keep up with changes in your personal and financial life. If you have had a change in your marital status or family situation, be sure to update your income tax allowances on your W-4. If you have a new source of income from a pension, Social Security, or self-employment, be sure to report the income on your tax return. Your CPA or tax software won't be looking for new sources of income.
And another tip is, it doesn't matter how great your structure is if it's built on a shaky foundation. You could have a great portfolio with your educational funding and financial independence plans all looking in really good shape, only to have those plans trashed by an unexpected, devastating life event. In these days of the coronavirus, we are all more aware of life's fragility. Let's use this awareness as an opportunity to review your coverage. We at Agili don't sell insurance, but we are happy to review your coverages for you. The thing about insurance is that by the time you need it, you won't qualify for it.
Another important piece of advice is to make sure that you have 3 to 6 months worth of cash on hand to cover expenses that you may have if you lose a job, for example, or if you have an unexpected expenditure, whether it's medical or replacing something around the house. Just making sure that you have some cushion that you can offer yourself if you have something unexpected come up.
Another thing we like to look at with our clients is how they use their debit card. How much money can it directly access? Do you routinely use it to pay for gas and groceries? Debit cards don't have the same protection as a credit card. We strongly recommend that you only use your debit card at an ATM and that you only have it linked to one small account.
Whether you're starting your career or you're semi-retired and you're in a lower tax bracket, you may be eligible for a non-refundable tax credit known as the Savers Credit. The Savers Credit and other tax credits are dollar-for-dollar reductions against total taxes owed for the year. Individuals whose adjusted gross income is below certain thresholds can claim a maximum of 50% of contributions to their workplace retirement savings plans or individually owned retirement accounts, up to $2,000 for individuals and $4,000 for married filing jointly.
Another financial planning tip is revisiting your savings rate. Are you saving enough for retirement? Have you built up an emergency fund? What tax advantaged accounts do you have available to you through your employer? If you're self-employed, have you started a solo 401k? Have you talked to your financial strategist about pre-tax contributions versus Roth contributions? These are all very important things that are good to revisit from time to time.
My biggest financial planning advice would be to take control of your budget. I think it's important that you know what your income is, you know what your expenses are. There's going to be fixed expenses every month, whether it's a mortgage, rent, or a cell phone bill. But I think it's important to identify those discretionary spending areas like travel, entertainment, eating out, where you can make small changes now that can have a large impact over time on your financial picture.
Whether you wish to save for a vacation or a class you want to take, we all have dreams, and usually the hardest step to take is the first one. To start saving toward your goal, open a high-yield account with a secure online bank and set up an automatic monthly contribution, even if it's a small amount to start. Make sure you label this account so it stays specific to one goal. Revisit this account through the year and increase the monthly contribution amount anytime you feel able to. Before you know it, you'll have an undeniable start toward your goal, and you'll be happy you took that first step.
We hope you've enjoyed hearing Agili's best financial advice. If you have any questions, please reach out to your financial strategist or visit our website. Thank you.